Hi traders, it's Tom Killick here, on TradingView, also known as Tom Killick. I've started again to do my weekly reviews. I made this decision over the weekend. The reason for this is I get a lot of messages on TradingView. A lot of traders are asking me to do the reviews again like I used to. If you go on my YouTube channel, you'll see that historically I did make a couple and people really grabbed onto it because I still get messages on TradingView, a lot of people asking me to do the review. So I've decided now to make this YouTube thing a bit more permanent. I'm going to actually do the review every single Sunday before the markets open. I'll be doing a Forex review of all the 6 top traded pairs like I used to. And also I'm going to do kind of a midweek report of how the markets are doing in other pairs and my forecasts and my reviews and everything else. So I'm quite looking forward to this because it's been a very long time. We're going to start straight away with the pair I've been looking at. So we're going to go to USD, JPY, dollar, Japanese yen, one of the top traded pairs I'm going to be looking at. I'm going to be looking at 6 pairs today, and we'll see how we get on with that. Hoping it all goes well. I believe for the dollar Japanese yen, I actually already do have an analysis, which is on my charts, but I'm actually going to delete it and start all over again and explain to you how I came to this analysis. Okay, as I thought, I do actually have an analysis already. If you have my TradingView, you would have already seen this on my ideas page, and you would have had the choice to have liked it or whatever. But this was my analysis before. You can see it looks kind of complicated, but I'd like to erase this and actually start again because it's quite simple, I think. So I should be able to do this. So I suppose to a novice trader this would look very difficult, I guess, and there's a lot to it. And I think the thing that most traders struggle with when they begin is where it's not the technique. It's not the technique that's the problem, it's where to use it, and that's the problem. I think anyone is able to do technical analysis, but you only perform technical analysis in the right places. That's the problem that a lot of traders have, and a lot of trading mentors, etc., have that problem as well. They teach you how to use the technical analysis tools, but they don't teach you where to use them. That is a major problem with a lot of traders that offer kind of mentoring. So you need, if you're looking for kind of a mentor or anything like that, you need to make sure that that mentor won't just teach you how to use indicators and technical analysis, but they'll actually teach you where to use it and the exact technique of where to use it to create a finesse. Because if I know how to perform technical analysis and I use it in any place, then I'm not optimizing it. I need to learn about impulses. I need to know where the impulse moves are, where the strength in the market is, things like that. So just kind of off-topic advice. If you do ever get to mentor, you do need to make sure that mentor will teach you not only how to use technical analysis, but where to use it as well. So we'll delete this now, and we'll start from scratch. So this is the dollar Japanese yen, as I said before. As you can see on my chart, I have a few averages. I will put all of them on the chart just for demonstration's sake, apart from 3. Okay, so when I first look at a chart, the first thing I'm looking at is I want to identify where the impulse is. Remember, if there's no impulse, there's no trade to have. So immediately I'm looking for where the previous impulse was. I think the very important impulse would have been here. In fact, I'll correct that for the sake of this analysis. I'll put it there, like this. Okay, so this is an impulse leg here. How do I know that? Because it's a big down leg that was longer than this up leg here. So this is clearly an impulse leg. Why? Because it outweighed all of the previous up move. You can see there's an up move here, pull back, up move, but this down leg is extremely obtuse. It's much bigger than it basically wiped out the entire trend. You can see there's some resistance here. So anyway, this was a big down move. This was the breaking point. It had been resistance here for a while. Price was not going to go higher. Traders and investors in turn gave up and they let it plunge. So that was very good. So we have the impulse here. We've identified the impulse. The next thing we're going to be looking for, well, we want to know where the resistance and support is. Very basic stuff. You can identify without really much thought. You can just zoom out here, and you can just say, okay, well, this is clearly support resistance here. You can see this peaked above, but that's okay. It's all kind of a zone here. So you can just find the peaks and troughs of it all, and just kind of identify the zone. So this would be the zone for me. In my personal opinion. Now, what do we need to do? Now we have the impulse. We know the impulse is here. We know that we are under a resistance, so the price is under duress, hence the down move. Now we want to measure the move, okay? So we want to get Fibonacci and you want to identify the swing. So to do this, you need to be tactical. So you need to know exactly where to do this. Okay, so you can see that my price landed on the 618 retracement. I know that some traders already are going to say, oh, Tom, you've drawn the Fibonacci inverse. That's how I like to draw it. I do that because I can apply the extension without having to apply an additional indicator. So I do that on purpose, so no worries. You can see it's nicely hit at 618. So now we have a impulse down move. We have a pullback which has hit a valid hidden retracement, and that's absolutely fantastic. So you can see that this is now valid. Until the price hit that 618 retracement in that zone, it was not as strong. But as soon as it hit that, it showed that the Fibonacci had time to validate, and when it did validate, the bears jumped straight back in. So the bears wanted more action here. So now we have the impulse here, the pullback, a measured pullback on the Fibonacci. This proves the move was not random. Now we need another part. There's a counterpart to this. We now need to know what's the plan, what's going to happen next. We've already had the down move. You see the downtrends going. Excuse me. Are you going to be able to find any continuation? Well, the answer to that would be yes. If you just to apply kind of common sense here, you could get this arrow and say, okay, I believe that this here is going to be a free wave move. I'll just clear this up so it's nice and clear for you. I'll get rid of that. I'll come back to that in a second. For now, we'll stick with this. So we'll go through that again. So we have the nice down move here. We have the pullback. We've hit the 618 retracement. Now, what do we want to know? We want to know if we can find a trade. That's the whole point of this. So remember, if you have a down move and a pullback and you hit a validation, this could be a free wave move. And of all of a free wave, if you know anything about it, should be that you can expect an equivocal move to the downside in equivalent to the first impulse leg, which is this one. So I'm guessing that this would be the big down move now. So now you want to kind of see where you are in the immediate area. So the beginning of the analysis is always about going into the past and figuring out the key levels and the impulse to validate your trade. So this is what I was saying earlier. A lot of mentors won't teach you that specific part, which is very important that you know. You need to know where to use the analysis. I've looked already to find that I'm in a good place and the pair is in duress, it's in a stressful situation. You want to find a pair that's under stress to trade. You don't want to find one that's all happy, everyone's happy, because that's not a good way to trade. You want to be in the market you want to be in a fearful market, really. You don't want to be in a greedy market. You want to be in a fearful market. You want to be in a market where everything's kind of topsy-turvy, and all the professionals are really kind of attacking against the panic, if you like. So another thing I noticed here is, as I was saying, we're going to go to the immediate situation after we've looked at the historical situation, and immediately I realised that if I remove this leg, that this leg here was a wave here coming off of this. So this was a validation with a nice move. This is another impulse leg. Why? This leg here was bigger than all of this consolidation. This is obviously an impulse leg. The immediate thing that happened afterwards is we had a pullback, which I think I can pin with the Fibonacci. We had a pullback straight away. I can just validate. Hopefully I can validate that. Sorry, I've gone the wrong way with this. Yep, I can validate this leg. I can say, okay, so this was an impulse leg, and to prove it, we had a nice pullback to the 786 retracement where we had a rounded top. So that's interesting. I would draw that in, but I don't have the space. Yeah, I'll just have to leave that like that. You can see that you have the retracement in the same place. So now I can move my arrow down to the retracement where I expect the next move to be. Now, the thing that's very interesting, I'm just going to try and shrink this actually very quickly. Oh no, that's smallest little go. Okay. So you can see we have the nice pullback here to the retracement, and you can see the breakdown is in progress. Now, this is a rounded top here. You can see you've got the breakout window, and you can see this circle here. This is a rounded top situation, and you can see it's breaking to the downside. My analysis of this would be that I'm expecting to break down next week. I think the long-term target here will definitely be at the around 106.50 level. I think it will achieve it in a couple of weeks. I am obviously active in this trade, or I wouldn't be talking about it. I've been active actually for quite a long time. I think I got it in actually on, around this time here. I've been in for a very long time. Been trading to the downside. You can see that this is a free wave situation. So you have the free wave here, the big free wave, the long-term free wave we discussed earlier, remember? You have this one, and then you have it again, and this one is a free wave situation here. So now I've discovered that within all this within this mess, you can see that this long-term free wave here, which I'll demonstrate with a bit more detail. This, you have the wave 1, wave 2, and this is wave 3. Okay? Now, if you remove wave 3 from the long-term pattern, look at the situation here. You can see that there is a smaller free wave within the longer-term free wave pattern. So, this indicates to me one thing. It shows that the downside is not over. I have a free wave long-term system. I now have a short-term free wave system within the long-term, so I'm able to trade here. You can see this is very good territory. You've had a breakdown, you've had a rounded top. You can see it's going to tumble next week. You can see the candlesticks. If you look at the candlesticks, if we just zoom into the free wave, the short-term free wave, you can see you had the rounded top. There's multiple. There's shooting star, doji, spinning top, shooting star, breakdown straight away. So you can see it's very weak, and also things that can help you that you might not even realise. This is kind of a like kind of a dark cloud kind of thing. I think it's just extremely weak. So there's lots of, you can see the tail on the tops of these candles. There's lots of selling pressure. This is where the finesse of trading comes in that a lot of traders don't talk about, and that is either because they don't really know how to use them, or they're not professional enough. Because anyone like me who's worked in a bank and trades professionally would want to know how the candles work, and Heiken-Ashi, but that's for another day. We'll stick with candles for now. You can see that the wicks here are showing selling pressure. I only look this closely at the pair once I've identified a place to trade. I don't look at the candles first and think, oh, okay, whatever. I identify a place to trade once I've kind of figured out this is actually a legitimate place to be trading. Then I am deciding on how I should be trading. So you can see I've got the small wave, I've had the pullback, and now I'm definitely sure, and I'm very happy to be trading to the downside. Next week, it's very obvious what's going to be happening. I believe this rounded top, you've got the break, you've got the small wave here, correction. I believe it's now going to break to the downside here, and I reckon the target's about 106.50, as I said before. So, just to go over this one more time, we had the long-term free wave system, so you had the breakdown, the pullback into the support resistance zone. We had the Fibonacci retracement number, which proved that this move was not random. Then we had a further breakdown, and we are tumbling to the downside in a long-term free wave system. When we noticed this, we also discovered that there was a free wave system, a small free wave system within the longer-term free wave system, and the targets coincided at the same level. So now we have a trade that makes a lot of geometric sense. So when we had the breakdown, we discovered there was a rounded top pattern, and we saw a nice breakdown to the downside. That was our discovery on this trade, and my overall analysis is next week the trade will be going down, and I believe it will go down significantly. It could even achieve our target 106.30 by the end of the next week, or this week if you're over. So we'll see how that goes. But my analysis would be this is going to be downside. Everything technical is in place for this trade. You've had the validation, the long-term and the short-term wave patterns. Everything's indicating bear move, and the candlesticks are strongly supporting this theory. So I'm going to move on now to another pair I'm going to be looking at. Not all of the analysis I'll be looking at today are likely to have any sort of time compared to the one I just did, because I went very into detail. That's because I saw a lot of potential. Now we're going to be looking at the pound dollar. The first thing I noticed straight away, just immediate common sense, there's obviously a resistance zone here. The very obvious thing, I can just see that. You can see this resistance, 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 resistance. It's been continuous resistance over and over again. Now, you can see that during the week, in fact I'll switch to a daily for this part. So this is the daily situation. You can see, yeah, this is kind of, in fact, if you are viewing, I suppose you could. So, You see you're under resistance here, sideways resistance. You can see just from a hypothetical point of view, this could be a structure here. Okay, so the pound against the dollar, the cable is in a clear structure, as you can see, very, very obvious. Now, when you have something like this, the first thing you want to do, especially when the price is at the top, you want to know what's going to happen. Now, the only way to do that really is by deciding whether it's going to break down and go to the downside. Your only outcomes are this. It's either going to bounce off the structure and maybe come back in structure again, if we just drag these along a bit further, and stay in structure. Or it has the momentum necessary to break structure like this. The thing is that it's not entirely easy to know what's going to happen. Just had a blank moment. I was just thinking. It's not always simple to know where it's going to go. With this situation here, you have first thing that sticks out to me actually, traders, is that you have there's a bit of a juncture here. Let me show you what I mean. You can see here that you've kind of hit the 0.5 Fibonacci retracement as such, like this, and then you pull back. Now the theory could be a theory that this could be the situation here, like this. You have the wave one here, this here is consolidation, and then this could be the breakout. But the problem is it's very junky. So my advice for this trade would be wait for the market to open and see what happens. Let's just look at this from a different point of view. If we go down to the 4 hour, we might have more clarity. Okay, so this is the 4 hour chart. We'll just get rid of the drawing and start from scratch. This is the 4 hour situation. You can see it's a bit more understood. And we still have the same thing that we saw in the daily. Obviously this is the 4 hours, so it's just 6 candles per day candle, so it's just more zoomed out. When you look at it from this point of view, it's kind of, I suppose it's slightly more realistic to expect that this could actually happen. Straight away I can see there's a three-wave system, the impulse, corrective structure. I believe that corrective structure actually has a support bound. Yep, thought so. So when you look at the pound, you can see it had a nice move up last week, had a nice correction, had a nice move so far, had a pullback, and you can see that it's had another swing here. So the immediate thing that would stick out to me is I think that this actually, when it opens, will trade down next week to begin with. My reason for that is because you can see it's clearly traded broken out structure. It's had a nice down move. Now it's having a lower low here. So this is very weak. So next week, the immediate sentiment, I believe the market will gap down when it opens later today. Maybe even by the time this video is uploaded, this will happen. But I believe that the thing that needs to happen is I'm expecting at least a bit of downside, even if it's just to here or something like that. It needs to move down a little bit. Now, I'm not a harmonic expert of speech, but I believe there is something in there, but I'm not be sure. I'll leave that to someone else. I did study him for over a year, but so I'm not going to make that appropriate to my analysis to use harmonics in this analysis. I will just say that the daily situation is very unpredictable. It's under structure. The candle on the Friday was junky, and now this is the 4 hour situation. It's a lot more clear to me. I really do think that I think downside will be expected. I reckon 124.40, and maybe it could bounce. But this could potentially here, it could come all the way back into the structure again. It could test this previous support as resistance, and it could pull up again. It could be a massive failure. It doesn't look particularly strong to me, actually. You can see it's had quite a strong pivot leg. The bulls tried to jump back in, but the bears have been fading it all day for the last 8 hours of the session, which I wouldn't have expected. It really depends on how the dollar acts, depending on what happens here. But I think when it opens, it will trade down. But I do believe the overall long-term impulse will be to the upside. So when this opens next week, I'm expecting a bit of downside. I reckon minimum target, I reckon I don't know, 124.60s, could be a bouncing level, or it could come all the way into structure about 123.90s, where it could bounce to the upside again. But I think the beginning of the week, the cable's going to have a rainy day, and I think it will trade down and then trade up later. That's my analysis on that one. Okay, let's move on. Okay, I'll get rid of that, even though the analysis was right. Now this is Australian dollar versus dollar. Now, first thing again, you just want to identify where you are in the trend. If there's no trend, obviously, then there's no trade. So you need to be aware of that. A good trader is not a good trader because they can trade everything with ease. They're a good trader because they leave the things that aren't tradable and they trade the things that are tradable. Again, that's another tip I'll give for free. A lot of traders don't know that either. It's not about how you trade. It's not about kind of your ability to trade anything. It's just your ability to trade the right thing in the right way. And again, a lot of traders won't tell you that. Okay. Anyway, you can see there's a nice up move here. So you've had a pullback. This is a daily. So this is over the week. You can see the week has actually been kind of a recovery. You see we had a I believe this will be Monday session. You've had a kind of doji, and you had the engulfing signal here, and you've been kind of rallying to the upside. So the instinctive thing here would be to say that there is actually some resistance, sideways resistance that's immediately stuck out to me. A lot of traders say, how do you notice these things so quickly? Well, I was lucky enough to learn it in my own way, and I learned a lot along the way. I learned a lot about I believe that you should only learn something that matches your own strategy. I don't believe that everyone is built for trading. I think that if you don't find a strategy that matches your personality, you will never ever become a good trader. And a lot of the top traders on TradingView always try to tell you that anyone can trade. But I don't want to mention names, but some of them try and kind of preach value to their stuff, but they manage like $20,000 and they're like top traders on TradingView. It doesn't make sense to me. I think they're very small time. I don't think their advice is true. I think a lot of new traders kind of believe what they say about, oh, anyone can learn my way and it'll be the right way. When you're trading, you need to learn a framework, then you need to study by yourself to determine which the best strategy is. That is the only way you'll ever be successful. If you look at any successful trader in the world, they did not become successful by someone teaching them a strategy and they used it and they became the best trader ever. They took the framework from the person and then they used their own mind to create a strategy. That's what I do when I teach my clients. I teach them the framework and I send them away. I say, study on your own. Make your own interpretation of the information I've given you. I send them on the right direction. I send them up the yellow brick road, but ultimately it's up to them to pursue it themselves as well. Then you'll be a successful trader. Anyway, back to the analysis. You can see there's a nice up move here. You see we've had a pullback. You can see we had a pullback. We've hit the resistance a number of times. We've had a nice down move, and then we start to trade to the upside. You can see we've hit the resistance now. So what's going to happen next week? Now, excuse me. Now this is difficult because if it opens lower, say it opened 20 pips lower, let's just say it opened about 50, 75, 50, then you're trading under this structure again, so the pair's under duress and it's likely to tank it. But if it opens higher, then you're going to get an up move. But I think there's a caveat to this up move. I don't think it'll be a straight up move. I think if it breaks here, it will have some temporary momentum, but it will eventually pull back like this and go to the upside like this. So this is one that I need to wait to open. Like I said, if it opens higher on a daily later on today and it trades to the upside, it will come back down, then it will test this as resistance, as a support, and it will trade to the upside, and then you can see that it could also trade down. So really there's nothing to say here, nothing special. There is something that some traders will find interesting, and actually I'm included. One thing that immediately sticks out to me is the fact that there is actually a Fibonacci swing here, 50% retracement of the swing leg. This could mean that this could be resistance from the sideways and resistance from the Fibonacci. Both tell me that this could be a potential resistance ceiling. But also, a caveat to that is if it gaps above both of them, it means investors do not care. And it means you're likely to have a momentum move to the upside. The reason I say it will be a momentum move if it gaps higher is because if it gaps higher above this level, above the retracement and the sideways resistance simultaneously, then it means that it's ignored that as a resistance ceiling. So in no way should it trade below this level. So if it breaks above here, you can put your stop loss right on there. Why? Because if the ideology of getting into this trade was that this was support, the Fibonacci was acting as a resistance, and this was a sideways resistance, then you should know that if it trades above, it should not come back below it, because these are both now acting as the support effectively. When it gaps above it, they have become support inadvertently. I wouldn't expect there to be a retest, but what I've just said all depends on it being a gap up. If it's not a gap up and it trades up normally, then I believe it will be, like I said before, like this, kind of a corrective structure situation. But like I said, if it gaps up and it neglects this level and the sideways resistance, then you have something really good on your hands. You should be looking for a trade to the upside with great results. I reckon if it does gap up and it neglects this level, like I said, you can expect it to hit 77.50s very, very easily. Okay, moving on. Okay, this is dollar Canadian dollar. So here we have the pair. First thing that sticks out to me straight away is I believe there's some sort of sideways support. Very good. You can see it's just nothing really special. You can see it bounced off this resistant, this support line here. You have an engulfing signal. You have a doji, whatever. You can see it's just quite junky already. The first thing I'd do when I saw this, I'd say actually, I believe there's actually a harmonic pattern. Just need to identify the swing. That is the swing leg. Yeah, there is a harmonic pattern in play, but I think it would kind of have to close more shallow than that for it to complete. But there is a C leg here in the making. Maybe that could be a D at some point. You can see it's a nice engulfing signal, but just from a daily point of view, nothing really special is going on. I will just outline the technicals for you, just so you can learn. Of course, resistance here. You can see it's a sideways support. This is kind of a structure, but I don't think it will hold. Especially the bottom line, I don't think it will hold forever. I'm sorry. You can see that this is nice sideways resistance, sideways support. Now, really, from the daily point of view, I wouldn't be able to say anything too good about it, and if I did try and make anything up, I'd be lying. So what I'll do is I'll go onto the 4-hour chart and try and dissect the analysis and make an analysis from this. So we'll see. Okay. Now this is the 4-hour. Immediately, it's more clear to me what's going on. When in doubt on a daily, always use the 4-hour chart. It's kind of a hidden secret that people won't want to tell you, but I will. Always use the 4-hour. It's like the daily, but it's just kind of a bit slower. It's only 6 candles per day, but it does give you a lot more clarity, so it's useful. First thing I've noticed here, you see there's lots of indecision in this pair recently. It's trading quite a tight range as well, I believe. Yeah, it's just kind of 200 pips over the last couple of weeks, I think. You can see that it had a nice impulse on the 13th, very nice impulse, and then it had a nice pullback. Now this pullback immediately makes me want to draw my Fibonacci. I believe I will get a hit on a higher retracement. 78%. Okay. So you can see they're supporting here. So what do I think is going to happen? I think really that I think it will probably, my opinion, probably trade up to about 133.50s, and then I think it will start to trade back down again. I think it will lose momentum, or it could do something a bit like this, kind of do a zigzag. You're probably thinking, well, how on earth do I know? It's simple, really. You can see there is momentum here. You can see this impulse. This is rounded top. I believe it's going to try and do a wave 3. Do you remember I've been telling you wave 1, correction, wave 3, but I believe that the wave will fail. And I think it will stall at the resistance, and I think it will travel back down again. I think this will be negated, and momentum will thus be lost. So, yeah, for this trade, it's all just good really. So it's just like, I don't know. We'll see how the market opens. If it, and the thing I will mention actually is if it opens below, I'll make it nice and clear because this could really be helpful to you guys later. If it opens below without any momentum, if it just opens at below 133 handle, this is a great short opportunity. This will be a short. So if it if it goes if it goes below the 133 handle, you should be shorting immediately. Not if it opens at 150 and then trades below it. I mean, if it physically opens on the nail below 133 handle, this is a fantastic short opportunity. It really will be a very, very powerful trading signal. In fact, the most powerful. Just loading, taking a bit of time. I think it will offer you a very, very compelling signal. Yeah, you see there's a doji. If it does a kicker below the doji into the engulfing signal, it will give massive bear momentum and pessimism from long traders. So you'll have a lot of people taking their profits / getting stopped out, and you have the simultaneous activity of people shorting. So the profit taking, the stop lossing, and the shorting itself equals a lot of downside, which equals pain. There will be severe pain. And it will go hard, it will go down very hard if it goes below 133. I just wanted to see what the daily candle was. I thought it was a doji, just wanted to be sure. So my forecast is very simple. Like I said, I think it'll trade up to kind of the top of the resistance line and trade back down. But if it opens below the 133 handle, then it's a massive short and you should be going to the downside 100%. I just want to move on because I think I'm kind of going a bit slower than I'd like to have done. But I hope you guys are learning. If you are, then that's fine by me. Okay, this is New Zealand dollar against the dollar. I'll go on a daily chart to begin with, and we'll dissect together. Okay, just looking at this for 2 seconds, I can see there is bulls that are definitely interested, and I will justify why. I think there's also. Okay, so this is fantastic. Straight away, remember, I want to find where I am in the trend. You can see I've got sideways resistance straight away. There's also going to be, I can see already, it's going to be so you've got the sideways support and sideways resistance in play. We'll get rid of the support for now, it's not really important. See, this is just, I can see straight away, even my dog could probably have bought this position, it's just obvious. This is a buyer position. See here, you had the, we'll start from the basics. You had the higher low here, like this. Higher low. And then you had the resistance, like this. And then you had, what I usually do is just, HL stands for higher low, and I usually put that there like that. It just reminds me because the gradient is quite shallow, so I want to be able to see it. You can see here anyway that we've had the breakout, very, very good breakout, and the reason I can tell you it's a good quality breakout is because number one, price was travelling on the resistance continuously, and number two, there was many reversal candles indicating the breakout. Now let's get close into them candles. And we have the piercing signal, a doji, a pin bar which causes breakout. There's a long wick here. This is massive selling pressure. But what happened by the end of the day? Not only did the bulls bring it back home, but they exceeded the opening price and broke out. So this is a massive, this candle here tells you everything you need to know already. That candle alone is enough for a money manager like me to buy this position. It's an absolutely perfect position. This is why you need to know candlesticks, because to other people it's just a random candle breaking out of the range. No, it is not. That is telling you so much more than you can possibly imagine. The wick of this candle, selling pressure. When this opened, it tells you that during this trading day, the price made it all the way down to 69.07, despite being up, opening at 69.57. But they pulled it back all the way from the lows. Soon as it hit that sideways resistance, it must have some importance. As soon as it hit that sideways support, the buying pressure smashed it, and it broke the sideways resistance. I can't tell you how compelling that is. Not only have the bulls wiped out all the sellers of the entire day they've gone above the opening price despite massive selling pressure and broken the sideways resistance. This is massive. There's a lot of momentum behind this candle. That candle tells me a million things. You can see the next day there was a nice bull candle. Nice breakout, very, very strong. And then Friday session we have a doji. Fine. So what's the outlook for next week? The outlook to me is simple. I think it's going to go to the upside. It's quite obvious, but I believe there could be a pullback first. Now, this could either come in the form of testing the resistance, common support, and then breaking up to the upside like this, or it could just go straight up. But like I was just saying, it's so invaluable. That candle is so compelling here. And again, another thing that mentors won't tell you, they will tell you how important something is, but it won't tell you where to use it. I am telling you that if it's at a massive sideways resistance level, then it's a massive deal. And again, like I said about, not only did the selling pressure get negated, but it got rid of all of that, and it broke the sideways resistance. There's so much power in this candle. It's just absolutely unexplainable, really, how much power is in that candle. But also, it's also amazing how many people don't know that. So that's the difference between being, kind of knowing how to trade, but knowing really the finesse of trading. I was lucky enough. I've worked in banking. I've been lucky enough to really know. I've learned from a lot of people over the years, telling me little things. But I've always done my own interpretation of analysis to come up with my own strategies. Obviously, I've done programming over the years. I've done in trading. I've had millions of strategies. I've made strategies. I've built strategies. I've sold strategies. I've done everything really in trading. But the strategy I have now is just makes so much sense. And to me, it's just that kind of the value of just understanding what you can see. The graphic depiction of investor sentiment lies within candles, which is invaluable. Anyway, we'll move on to see where we're at now. Okay, that's the one. Just had to make sure. Okay, this is a dollar Swiss franc. Very good. You can see the daily. Excuse me. You can see that this is basically first thing that sticks out to me. I did just remove this line, but I want to start from scratch every time. You can see this is very good sideways resistance, brilliant. You can see that it's trading nicely. I'll get rid of that indicator there. So you can see that it's trading, it's kind of at duress at resistance. It's just recently hit the resistance sideways, and you can see that the bears the bears liked it a lot, but the bulls did not like it one bit. So you can see the price has kind of trailed below. It's kind of difficult on this time frame to see what will happen, so I will digress and go to the 4 hour. Okay, so I'll just go to that line one more time so we can get it right in. So there's a rule to use in time frames that actually, again, no one else is going to tell you. And that is that if you use a smaller time frame, you need to gauge into a smaller part of the chart. Now, I know you're thinking, oh, it's bloody obvious, but it's not, because some people got to a smaller time frame, but they zoom out all the way to where they were before. That's not a good way to do this. If I go on a smaller time frame, it's because I can't understand the short-term sentiment, and I need to know what's going on in the short term to create my long-term analysis. So let's have a look at what actually happened. We had a nice up leg here in the 4 hour. It took a while, but it got there. It's a nice strong leg, and you can see that recently it's been it's got weak. You can see it's. I apologise for keep coughing, guys. You can see that we had this nice up move. We've had this down leg, we've had a pullback, and actually, I think I can see I know what's going to happen there. This, I guess, is going to act as, I don't know, some sort of resistance. It's quite difficult. I think you're going to kind of get something like this. I think it's going to fail at that resistance level, and it's going to come down here like this. It's going to trade up to the upside like this. That's my personal opinion. But there are alternative caveats to that, of course, as there always is with trading. Anything could happen. There is also the extended possibility that it could break out. But before you look for any buyers, you need to see a test of the resistance turn support to confirm this move is valid. So what I'm basically saying is my analysis is that this pair will probably go to the upside. There are applications for downside possibility, which I'm going to try and find. Yeah, I think the upside is kind of realistic. You can see that on the daily, you had the up leg here, you had a pullback. This is a piercing signal here, if you didn't know. This is kind of a doji. You can see that despite the candle being red, it had a long wick to the bottom. There's a lot of buying pressure here, buying pressure here. This is, I believe, my opinion now, on the daily as well, is going to be, let's just say you've got, I'll just draw it in very approximately. You can see you've got this like this. And then like this. This is what I'm expecting to happen. So, in fact, that would make a lot of sense too, because you also have the target now makes geometrical sense because you have the support zone as well. So, you have the nice up leg, you have the pullback. Remember, when you have a pullback, you want to measure the move to make sure it isn't random. Let's see where we are. Okay. So in this case, the Fibonacci is not very useful. So we'll get rid of it. I will just add a number one quickly, just find it next time. I'll go to that for now. So you can see that it's got a nice up move here, pullback, and you can see the up move is on the cards. I believe that this will be upside for next week. So watch this pair and watch this space. I think it will definitely be going to the upside. So I'll just get rid of those drawings, and we'll see what else we have to deal with.